Okay, hi everyone. Thank you for joining us today for today's webinar. We will be kicking off with the panel discussion for the first half an hour or so, and thereafter we'll move on to Kwan Hao's market outlook. But for now, if you have any form of trading questions, do feel free to actually type them into the question tab. So we'll be getting Kwan Hao to try to answer, some of those questions on how he really kick-started trading, how does he find trading opportunities, so on and so forth. So Kwan Hao has been a veteran in trading, and he has been a good friend of IG. So we frequently, engage him for our seminar. So if you have any question, just feel free to type in the question tab around trading. While you are doing so, I will just do a very brief introduction on what IG is about. Yep, so in a way, IG is Singapore's #1 CFD and FX broker. So we are actually regulated by the MAS, and you should have heard of us, in one way or another. We are all over the place. And of course, we have been the best Forex provider in, 2020, 2023, and 2024. So we currently have somewhat of a account opening promotion. So if you open an account and trade CFD with us, so you just need to, create an account with us, fund at least 2,000 into your account, and then you start trading and you can receive up to $888. So if you want, you can just key in you can just scan the QR code that is on these slides. I'll just leave it on for maybe a few seconds. Thereafter, after the webinar, we will also, leave this QR code for you. Okay. For disclaimer, do take note that today's webinar is just for educational purposes only. It doesn't constitute any form of investment advice. So I got to lay it out there, for your own trading or investment, please do your own due diligence. And this is Kwan Hao. Later, I think I'll give him some time to introduce himself. So clearly, he is a very experienced trader. He has more than 20 years in the financial industry. He is also a SGX speaker, and of course, regularly conduct a lot of workshops for fund managers, proprietary traders, so on and so forth. So once again, if you have any form of trading questions, do feel free to type in the question tab, and we will try to tap on, his expertise and experience to give you some insights. Okay, so now let me take a look at some of the questions that you may have. Okay, probably I'll just start the ball rolling. Some questions, that I am really very interested to know regarding trading, especially someone that is just started out on trading, how do you actually get started in trading, and which markets do you actually started on for before you move on to other markets?
Yeah, I think first of all, I want to thank you, IG, again. Yes, Jun Rong is right. Very old friend and good friend of IG. And it's always a privilege to work with the #1 CFD player in the world. And yeah, I think I'll introduce. I'm more excited to also share about the topic tonight on China, on Singapore market, Asia market, and gold market. But I think I'll leave the presentation later. But there's some swap in the format tonight. We're supposed to take on the panel session later, but there's some swap. But I think it's even work out even better. So what I intend to do before we have a dry run, just about 10 minutes back, I told Jun Rong that what I'm going to do, the panel discussion for the next 25 minutes or so, is that any question I find is relevant, I will also share with you the market so we can analyze together. And your question about the first question again, Jun Rong, I could see some of the attendees just joined. Yeah.
Yeah. So basically, in a way, how do you first get started in trading? And then for someone who just started, everything is new. Is there a preferred approach based on your experience for them to, get started on this journey?
Okay, then is allow me to share a bit. My history here is that I study engineering, yeah, but I never practiced that at all after I graduate. So I still remember the army days. I really interested in the stock market, but of course I never knew about trading. So if you ask me at a point in time, maybe I'm 19, 20 years old, serving the army, I was very interested to involve in investment. Of course, at the point in time, I have no idea is there any difference between investment and trading. But all I want as a young man, 20 years old, is to make money, right? So I even carry I remember I subscribed to Meta stock, and Meta stock is then it link. I want to get very sophisticated then as a young man. Then linked my pager. That was serving the army. Thankfully, I could book out. The pager was ringing. Then, of course, then the staff sergeant got very interested. So the staff sergeants like crowd around me because they're full-time staff. They're also investment as well. So I became the expert in the army back then. But did I make money back then? A bit here and there, but not much. I think I lost more than I make because as a new startup. But I think the interest really started from truly enough, as a young man, 20 years old, to this year I'm 52, the motivation is to make money. But subsequently, I realized that it's beyond making money. So when I joined the industry, that means after I finished my liability as a student in the national service with engineering certificates, I did not pursue engineering. So after all these studies and national service, I jumped straight to back then I believe follow up after my passion, which is I think the financial market I think I like at the point in time. Remember, I'm 21, 22, 23, 4 years old. So I think financial market, I think I like it. So I joined and wanted to make money. But once I joined, very shortly later, that it really intrigued me about the financial market, which I joined Cymex trading floor. That's where all the futures, derivatives, JGB, Euro dollar, Nikkei 225 was so active, Taiwan stock indices, Simsky was much later. Then I realized that it's so interesting that back then it was all the floor traders, they are these full-time traders, literally full-time traders, that they have to buy membership. They are creating the market. They're called the market makers, but they're individual. So of course, at a point in time, that was about maybe 25 years ago. What most of us, maybe your father or your grandfather, some of you may remember they are watching the SBC text, if you still remember. If you know SBC text means that you're about my age, right? So if you don't know, it doesn't matter. So they are viewing the SBC text, but behind the scene actually is the actual traders on the trading floor. We are trading the market, and we are about a minute ahead of those people watching the SBC text. So then I realized that, wow, speed matters because I look at all these full-time traders on the trading floor itself. They have the first-time information and they make a lot of money because they are ahead of everybody else. So that's the first thing that I learned, that speed matters. But of course, then shortly later, the trading floor, I stayed there for 3 years. Then the Asia crisis hit 1997. And shortly later, I got retrenched by one of the, in fact, I got retrenched by Bank of America. But that didn't stop me from not getting into the market, and because of the Asia crisis. And so shortly later, all these open outcries no longer exist. So these locals who take full advantage of the live trading back then, when convert to electronics trading, I would say that a good 95, if not 99% of them that is making a lot of money on the trading floor, they could not make it. So I started as interested in the market, but it was a learning journey on the trading floor where I see that all these traders taking advantage of because of the market inefficiency. So back then was floor trading. People who trading off the screen are always a minute or two late, so they took advantage of it. So I began to understand that I do not want to trade. There are a lot of traders out there. Some trade based on spread, all this and that, because of market inefficiency. But I knew that the market is always evolved. So if I find that there's a gap that I make some money from the gap, it will not be in the longevity stand, because when the technology catch up, I will lose the advantage, just like all these floor traders. So I think very deeply as a young man of 27 years old back then, And I say that I want to build a skill of between fundamentals and technical. So, and it really helped me a lot. So what I do now is that, yes, I trade the market, but I have to say that trading the market is an income, because why I say so is like a self-employed job. The moment you do not trade, let's say you're an intraday trader, which I'm not a full-time intraday trader, because I may not have the time to do that every day. And if you're a full-time intraday trader, you're self-employed. The moment that the day you do not trade, you do not receive the income. Let's say, for example, you're outstanding traders. So you got to work hand in hand. I just share my experience right now is that, yes, trading is fun, but my personal standard, it don't make me a lot of money from trading, but it gives me the personal income, monthly income. Sometimes I make some income, sometimes I don't. Yeah, you have to understand that. But we try to be as consistent as we could to make the income, trading income monthly. Yeah, so once you have your lifestyle, your expenses, so you spend some and you try to save much of it. You can be employed, underemployment, you can do the same thing as well. You don't have to trade. So what I do now is that I literally enjoy doing swing trade. That means having some position and also having some long-term view and park some money into long-term investment. So my model right now is that, yes, I trade to have that kind of monthly income, but out of it, you have some surplus. I hope you have surplus. You try to gather some surplus. Then you use this surplus to roll into investment. That's how I'm enjoying myself right now. And I think I also enjoy myself sharing in different platforms, especially with IG. I think that's fantastic. So sorry, it's a short answer, but I give you a long one because I just want you to create that longevity in trading and investment as well. So I would say in short that trading gives you if you're outstanding, trading may give you the monthly income that you're looking for. But in order to grow your wealth, even traders, we have to invest as well. If I see a trend about to upturn, for example, gold last year, I spoke a lot about gold. In fact, about 10 years ago, I spoke a lot about gold. So 10 years ago, I started investing in gold, and along the timeline, I keep on accumulating gold. So of course, only this year and last year, the gold finally sees some result. But tonight, I'm going to talk about China as well. But you were able to see that later on after this panel session, I'm going to give you the discussion here, tonight's topic. Yes, I may be discussing a bit on the long term, but later I'm going to see that this long-term discussion through fundamental and technical development, we could also apply it to the minutes chart. And I'm sure we have some time, we're able to explore on that later on. Yeah, so Jun Rong, sorry, I give you a very long answer to a short question.
Yeah, no problem. So in a way, maybe I just jump in to share a little bit of my experience. I'm probably a newer trader as compared to Kwan Hao. And how I get started is initially, I just went to join as many market outlook webinar as I can, and then just try to learn. My rationale is that as long as I'm able to pick up one thing or two, I'll find it worth it. So back then, I actually went to SGX, and coincidentally, Kwan Hao is also one of the speaker there. So that's how I learned as well. So I think education is really kind of important. Therefore, we have this regular webinar session every Wednesday to share some of our views. Yeah, but as sort of a newer trader, I just want to pick Kwan Hao's brain on how do you actually find new trading opportunities? Like the market is so vast. How do you actually analyze something? Do you do a top down, maybe a fundamental approach, and then go to technicals, or you have a technical filter list, for example?
Okay, very quickly, I just want to narrow down to maybe a bit more of the swing trade to shorter term trade. Maybe allow me to share my screen. Then I just share with you the Nasdaq available stock market and Nasdaq composition, so to see that whether can we shortlist any market tonight. Okay. So I hope you can see my screen. What you're seeing here is the composition of Nasdaq. Now, so your question is that how do I shortlist trade? Now again, you may be looking at the monthly chart. Because monthly chart makes sense to most of us, we are looking at the long-term growth of all these composition of NASDAQ, Apple, Microsoft, NVIDIA, as you can see. But I have to say this, that if I'm going to narrow down to 60 minutes or even 5 minutes chart, the application will be the same. Now, so specifically, Jun Rong, you asked me about how do I narrow down to good trades. Yeah, I think to cut the question short, is how to narrow down to good trades is, for traders, we focus on skill base. Skill base means that, say for example, some of you may know about this term called inverted hammer or hammer. Yeah, so candlestick. I think most of us will not be too alien about this term. But I want you to look beyond, say, hammer or inverted hammer. In fact, when I qualify a hammer or inverted hammer, that means it must be a long week. The week must be very long, and the period, of course, this monthly chart is a one whole month. It must be exceptionally wide as well, the range. Now, so how do I shortlist for trades? Is that means it's just go beyond just stock market. So sometimes I look at different major indices, forex, whatever, it doesn't matter. So as a trader, specifically as a trader, that you try to build up the skill base, means that technical skill. Okay, so tonight, based on the monthly chart, you can try on the daily 60 minutes chart. You're able to see the same thing as well. You should be able to apply on the 60 minutes or even daily chart or weekly chart. Now, very quickly, as I saw a group of 8, you need to cast your net as wide as possible. That means a group of 8 stocks. If you don't see any opportunity, you look at the next 8, another 8, or a group of 8 indices. If you don't see any opportunity, you look for another 8 forex. So what my whole intent is that if you're so good in spotting, say, inverted hammer, which I'm seeing one right now, then you try your best to spot for one. But out of this group of 8, if you don't see any, you next change the next group of 8. Can you see any? So it's all about casting your net as wide as possible. So you try not to focus as a trader. Say for example, you only trade the Nikkei 225. You do not just you try your best not to just focus on one contract, because if I'm going to give you this example illustration whereby, say for example, Nikkei 225 is just going to give you one best trading opportunity for that week. But if you're going to focus on one contract, you're just limiting yourself to one best trade per week. But you try to cast your net as wide as possible to different contracts. I'm just going to give you this example on stocks because most of us can relate to it. So now inverted hammer, and bear in mind that the monthly chart have not closed yet. So we still have another, including tonight, another 3 more trading days to close. Yeah, so this could be a 60 minutes chart they are looking at. Maybe you have another 3 more minutes before the 60 minutes close. So immediately I can zoom down into, seems that NVIDIA is very interesting, but just gonna wait for the next 3 trading day to close. Can you see that this inverted hammer, to me appear very interesting here, is that earlier I did mention that the inverted hammer must be of some substance. So how do I identify the inverted hammer with some substance? Here is that this range is exceptionally wider than the norm. The norm, I would say that this got a range. Yeah, so you could see that based on the historic, on the monthly chart, these are the norm range, maybe about between $10 per month movement. But you could see that the last few months or the last maybe 1.5 years, the range has expanded. So now I would say that if, now you have to bear in mind that when I look at candlesticks, don't just literally take it as an inverted hammer. You try to look beyond the hammer. What is the psychology behind a hammer? So I work a lot about how to understand the market psychology behind every pattern. Yeah, so don't just take it as, analyzing is not data. Don't look at the market as inverted hammer as the market is going to invert. Yeah, but why? What's the psychology behind this? But tonight my topic is not about psychology, so I won't address this. But I would say that if on the last trading day for November, if NVIDIA closed with this inverted hammer, and I would safely say that this month, the top, which is at, as you could see here, is at 152.89 cents. It could be a potential top for the time being. Now, I'm not suggesting that the market is going to collapse, but I'm just suggesting that maybe what I'm seeing here is that this resistance is going to be quite tough to clear. We may meet some headwind. Maybe NVIDIA will have a bit of correction, or maybe some volatility, or maybe keep on testing until there's new development. Things will always change, but I don't want to say whether you'll break or not. But this is what I'm seeing here, that as the next 3 days, you watch it very closely. If it closes here, I would not prefer to long in NVIDIA, or if you're long, if you have some money, you may want to take profit. So then we're going to narrow down to a daily chart and look at the specific to see what's happening right now. So this is usually how I shortlist a opportunity. Then of course you could see my chart is really simple earlier. So after that, you for shortlist that NVIDIA is interesting, and it's literally, you could see that it's resisted here. Then what you could do is that you can pull out all the rest of the indicator, like you're going to study into the volume, whatever you're using. Say you're using the MACD or stochastic, I leave it to you. But you could see that how I shortlist, because the question about from Jun Rong is that how do I shortlist the market to trade? Yes, I look at the monthly chart, but I just want to give you a demonstration here is that the principle behind, if you're using the hourly chart, it will be the same. So first, you cast your net as wide as possible. Then you eyeball for an opportunity. Yeah, so in short, this is how it works. Yeah, Jun Rong, are you still there? Yeah, Jun Rong. Yeah, Jun Rong, are you with me?
Hi,
Yes.
Can you hear me?
Yep.
Yeah, so in short, is to summarize how the shortlist good trade is that you try to look at as many contracts as many markets as possible. Then you narrow down to the one that interests you. For example, is that the one that interests me is NVIDIA. I felt that they may have some resistance soon. Then you look at the fundamental. Yeah, I think it kind of it misses kind of target, projected target. So let's see the next few months, which I think there will be some headwinds. Let's see how it works.
Yeah,
so
I think there is yeah, sorry, just now I was losing connection. I think one question is, what's your advice on someone who's 36 years old, has no financial background in markets, but have been learning for past 2 years to go into this market? So is there any advice? Do you start from, macro first, or should we try to pick out a bit of technical analysis, you think?
Okay, if you're 36 years old, but I assume that you have a passion in trading. So I'm just going to go specifically that the question is that I'm 36 years old, that I'm passionate in trading. I attend a few classes. I think I know something. And how do I get started? Now, I think how to get started is that 36 years old, maybe I'm married. I hope you're married. Yeah, so start young, have a family, yeah, as young as possible, so you can have more time to trade in the future. Yeah, so I'm 52 years old, but my son is already 21 years old. So quite relaxed actually. So me and my wife are looking for the next 40 years that we can do a lot of things. Can you imagine I'll be trading for the next 40 years without sitting with my children on PSLE? So that's the thing that if you want to trade, when you're much later, you still can trade. Now, so you have 36 years old, I would say that whatever background you have, whether you have money, you don't have much money, it doesn't matter. Okay, if you have money, say for example, I would advocate that you must have a longevity mindset. It means that you don't trade on the motivation of making money. Trade on the motivation of seeing your performance. Let me just explain to you how it works here. Okay, so in today's market, it's so easy to test out your performance compared to 25 years back. Okay, I'm going to bring you back to 25 years ago when I first started as a floor trader. Back then, is that to trade in the market, what I'm seeing here is that most able to trade the market are mostly the very wealthy individual. I do not know where they get their money from. In my time, in the 90s, in the early millennials, these guys who want to trade the market, because to open an account, to open a contract margin is so expensive. There's no micro product, but today we have a lot of micro product. And these guys are served by bankers. So definitely at the point in time, I don't have bankers to serve me. So now today is, I would say that if you want to trade, anything is possible. Why? Because a lot of broker IG have all this micro product. Okay, so whether you're rich, come from a very good background, you have a lot of resources, it doesn't matter. But you don't burn out, because trading, all this trading platform is, most of the contract are margin. Margin means that you may trade $100,000 worth of contract, but you don't come in with 100,000, you come in 20,000 or 10,000 or 2,000. You can trade up to $100,000 worth of contract, depending what contract you're trading in. Now, how are you going to start trading is this. You do not burn out. You do not get burned out, because when you start trading, you are bound to have holding on to your losses. Yeah, so that the small loss became a huge loss. So always start very small contracts like the micro. Let me just give you one example here, is that if you start with a $10,000 account, so you try to focus on a 2% win each time. Now, if you focus on the 2% win each time, means that your $10,000 account, 2% win means that each time you only want to make $200. But in the same time, you only can afford to also each trade to lose $200. But your focus, earlier I mentioned about, try not to focus on how much money to make first, but focus on the skill, whatever skill you're looking at. Tonight, I share about the inverted hammer, where I think most of us are very familiar with. So you try a few trades within a week or within a month, quite a few trades based on certain methodology that you have. But allow yourself to only lose 2% of whatever account you have. Let's say your account is just $1,000. 2% means that it's $20. So you only can lose that $20 or $200 if it's $10,000 account. So maximum loss 2%, if not 3%. So now, can you imagine if you lost 2% per trade? Say, for example, imagine you're such a lousy trader that you keep on losing. How many times can you keep on losing to lose that $10,000 account? You can lose 50 times consecutively lost. Yeah, but I would say that if you have that, you lost 50 times. So far, I never meet anyone that have lost 50 times consecutively 2%. But I would say that then the other guy started with $10,000 account because of one huge mistake. He overtraded. One trade loss is $10,000. So that's not very wise, because you do not give yourself an opportunity to learn. But I would say that guy A, who started with $10,000, so say, for example, he's such a lousy trader that he lost 50 times consecutively. I've never met anyone like that. But I would say that at the end of this 50 losing trade, the first guy we have learned a lot. And honestly, $10,000, if you get started, yes, it's painful, you lost that, but it's not all your life, right? So you can always restart again. So I say that 36 years old, you start small. Go for the micro contracts, and you apply this work backward strategy. So earlier I'm demonstrating this work backward strategy means that you start with a sum with a trading fund, say 1,000, 3,000, 5,000, or 10,000. You put that aside. Then you have the equation of, if every trade I can only lose 2 or maximum 3%. How to make that happen? Okay, so this is not a workshop, so I just want to brief you some idea that go and think for a while. So whether you are very wealthy or not, it doesn't matter. So in this manner of managing, then you can test out a system. Then you can test out your emotion, see how you manage it. So once you have, with a $10,000 account or $5,000 account, to me, it doesn't matter. You look at your performance. If out of 10 trades, after a while, you find that your trades are improving. Out of 10, you make 6, you lose 4, but the 4 are very calculated risks. Then keep on improving. Then in no time, you find that I'm improving, that out of 10 trades, I'm making 6.5, and I lose 3.5 times. trade, then I think you are making good measurement on being more serious or maybe full-time in getting into the market. Yeah. So thank you, Jun.
Okay. Yeah. So I think there's one more question. I think it's about trend trading. Of course, you mentioned about gold market fluctuating a lot. How do we do short-term trading, but also understand the I presume the broader upward and downward trend? So any advice regarding trend trading?
Yeah, I prepared this for you. Yeah, so I know that because on the trading view, I look at the popular content, what are people looking at. So I know that tonight there'll be a few questions on the Nasdaq stocks. Therefore, I prepared this. Maybe Nasdaq, some with gold, some with Bitcoin. So on gold, this is what I have prepared for you. Let's look at the gold, and you will realize that the gold market, and I suspect that the gold market that, let me see, I have prepared another one. Yeah, so this is the one. And I think I have a few more. Anyway, yeah, this is a long-term chart that you can see in the gold market. Yeah, so based on this first uptrend line, I keep on mirror it. Yeah. So later on we'll discuss about this long-term chart. But let me just look at the very short term, because I apply simple trend line like the gold market, simple trend line on how to trade the gold market. Now, let me just blow this up. You realize that the gold and Bitcoin, they are an inflation hedge assets. Can you see that? Where the CPI hit a high of 9% in 2022, June. Look at how gold and Bitcoin perform. But let's zoom into gold. So the application, again, earlier I say that the application is the same throughout every market. You can see that how I use it for gold, and it's the same for Bitcoin. But since you asked me about gold, how to trade the gold, I look from big to small. What do you mean by big to small is that we analyze from the big time frame, where I draw the uptrend line. You can visit some of the video that is sponsored by exchanges that I discover with the viewer how to draw a trend line. So basically, in short, is this. On the weekly perspective, of course, this is a longer term. We look at the weekly chart. Yeah. So these are, I try to draw two trend lines. The first trend line is what I call the primary trend line. And the second trend line is called what I call the secondary trend line. Now, all these trend lines are good, means that in the near future, if gold ever dip to here, say about 2004, I will ask myself this gold, why from the very beginning, about 10 years ago, I started investing in gold, because of that, the war is in debt, and also the money printing. So we all know the story. If the market dipped to 2004, I got to ask myself that, is the world still in debt? And if the money printing still ongoing? If the answer is yes, I may continue to accumulate gold. So based on just simple trend line. Now I draw another trend line. I'm going to narrow down to the daily chart. Now you could see that on a daily chart perspective, I draw a new trend line. Yeah, so this trend line is still applicable. I try to draw at least two trend line, but let's say I just draw this. I will assume that this on the daily chart, it means that you can apply this through swing trading. So you may want to adjust a little bit here. So basically, the short answer to how to draw a trend line is that you have to find at least the trough. You have to find at least 3 significant trough, but then after they got align them, you join them together. So I found 1, 2, 3, 4. If you align them, if you project up, you see that this is perfect, right? So at least 3. If I'm going to join from here, here, and here, project up. So some days ago, this is daily chart, I find that this low is interesting. So remember that I like to apply trend line and candlestick. So this is a very classic hammer. So now the point of entry at a point in time, if you are more on the swing trading, because this will take about a week and a half to see the market perform. So on this day itself, we study into the trend line, and it is reactive. So for trend line, I just put it there as to observe, as a guide for me. But I'm going to look at the price reaction here is that as it touched this trend line accurately, And then on the day itself, after the day form, it formed a hammer. So the next day I have to take a risk whereby I believe that this low has been created. Then at this day, on its day itself, I also believe that maybe the market will reverse, because you know that my main trend is an uptrend. So that's how I manage a position. Now I demonstrate on the weekly chart and daily chart, but you try to apply this on the 60 minutes or 5 minutes chart, it will work well. But notice that I usually favor to buy on dips for gold. Why? Because it started from this analysis on the big to small. On the big picture is that it's on an uptrend. So it's quite straightforward that if the big picture is on uptrend, the smaller picture, it should be on uptrend. You are able to see more opportunity to buy on dips than to sell into strength. So I will keep my focus. I would say all the while one-way street, but I will keep my focus. For gold is every dip I will try to find myself an opportunity to buy on dips. Now remember that the weekly chart is for my long-term position for investment. So then for trading, you got to have you have the separate account. So my investment account is with one account, and then my trading account, I open another account that's for trading. So I would say that the gold, I believe that the next few days still moving up because it's reacting very well. So this could be a retracement, as you could see here. It's reacting very well here. So this could be a retracement for more upside to come. So because I just saw this gap. Yeah. So but where to stop loss is very tricky at this point. I don't have a sharp point to say that for gold is it a buy or sell. But if you really ask me, I have to say something. Is it buy? Is it moving up or down? I would say moving up. But the problem is that I do not know where to stop loss at this point in time. So I leave it to you. But I just want to showcase to you how to trade into the short term. So this is what I apply. You could see how I apply on the big picture. I use the same principle to apply in the smaller picture as well. Yeah, so Jin, right back to you.
Yeah, so actually in the way, my personal style is also I like more of a fading the short-term trend against the longer-term trend. So for example, my own view is that, from the longer-term time frame, if the trend is upwards, you wouldn't really want to, go against that. So from there, if the trend is upwards, I'll only be looking for buys for any form of a dip, for deep buying. So maybe daily chart, is an upward trend, and then you can zoom into the 4-hour chart and then look for any very short-term bearish trend, and then waiting for somewhat of a signal for a turnaround. So in a way, my view is, never go against that longer-term trend that should kind of determine your direction. Yeah, so of course we do have some other questions, but of course, it's 7:40. And then I believe that, we should move on to the next market outlook. So I think Kwan Hao will share some of his views. I think he has already shared on her goal, but I think many of us are interested to finding out about China. So I think I'll just pass on the time to Kwan Hao to share on his overall market outlook.
Okay, thanks, Jun Rong. Yeah, I always like what Jun Rong mentioned that the last meeting that we have is in May. He said that he's been watching the video that's sponsored by one of the exchange. He said that he picked up something from my sharing is that the gold is the leader of most of the commodities. So which is true. I think if you find that you miss out on gold, and gold is still around the high, by the way. So there's still a lot of other commodities that is still lagging behind gold. So I do not think they have missed out a lot if you have not get into the gold as investment assets. I think there's a lot of other commodities that you can take a look. For example, like silver, crude oil is still pretty low. So these are some commodities that I'm very interested to invest more into it. Yeah, so I think Jun Rong have to go, and I will just take over from here, and maybe the rest of the segment. So thank you, Jun Rong, for facilitating this. Hopefully we can meet up again in a physical meeting. Yeah. Okay, so without the just share what I'm supposed to do, which I'm all excited to share because able to have the opportunity to share about China. I think that's much look forward to it. So I hope that I can prepare all the viewer into 2025. So you're able to see that what I'm going to present here is the application between the fundamental development and technical development as well. So I'm going to touch on the gold market into 2025. How can you can position yourself? So of course, earlier I shared on the technical aspects, but allow me to share on the fundamental aspects as well. Why from buy gold and now I'm holding gold, and why US is a trading market and why Asia is a buy into 2025. So let's get started. That which year was the year that the market you have shaped the market for a generation? Yeah, a generation could be 20 years, it could be 30 or 40 years. There's no clear definition. But in my next generation, I think I will be maybe 70 years old the next 20 years. There's this 1 year that have shaped the market for the generation. Now let's try to get into this. So I will not get into who I am, but you can check GPT. My name Wong Kon, you'll find out what I'm doing. Okay. Now, so this disclaimer, and what I'm going to share with you is based on my personal conviction, for my personal consumption, is for educational purposes. Of course, if you want to invest or trade based on what I share tonight, please seek for your brokers, who is IG, for their help. Yeah. Now let's get started on the year that shaped the market for the next generation. So I think this market outlook is not just in 2025, but for a generation to come. Now let's take a look at what happened. Very interesting here over the last generation. How old was I when I was in the 1980? I just want to give you a time frame of a 52 years old man, the environment that we grew up in. In 1980, the inflation was about this high. Yeah, so it came down. They could see that over the last 40 years, the inflation, the US CPI is coming down, so is the interest rate. Now, when the interest rate come down, it also means that the asset class go up. Yeah, so in my generation, since I was a young boy in 1980, when I was 8 years old, so I grew up in an environment that I know that buy assets like properties, US stock market, it will only go up. Yeah, it will only go up. But now the risk is this. I want to see here is that inflation, but you can take this as an interest rate chart as well. It's very similar. That over the last 40 years, what happened here in 2022, I think it's 2021, but 2022, it broke this downtrend line technically for inflation, and it reached a high of 9%. And then now, could we be in a retracement for more upside? I think this is what Jerome Powell very concerned. So that's why he's very careful about how he tweaked the interest rate, not to tweak too fast, too low, too quick, because that may cause the inflation to crawl back up again. I think he knows that the inflation or interest rate has already broken above the last 40 years of downtrend. It's not just inflation, but interest rate as well. So now you can feel that your mortgage rate, if you're in US, the 2, 10, 30 years yield, the mortgage rate is still very high. It's about 4 or 5%. Yeah, so it's still that high. So, but the Fed fund rate has come down. Fed fund rate have not really come down. Total sentiment. I think that we're going to watch it very closely. Now let's look at what Jerome Powell said to try to get some hint from him. That he say that the Fed doesn't need to be in a hurry to reduce interest rates. So what he's suggesting here is that he's still very hawkish about inflation. Yeah, so I don't want to be too hurry. So I reckon that December, there's one more meeting before the year end, he may not cut the interest rate at all. So far, he cut 2 rounds out of the last 2.5 years where he cut interest rate. So he cut one time in 50 basis point, another one just this month, yeah, for 25 basis points. So next month will be a last meeting, which I do not think that he'll cut. But whether he cut or not, it doesn't matter. But we just have the knowledge that we are living in a very different time compared to the last 40 years. Okay, now let's study into what we're supposed to do here. Now, so when interest rate hit a half 9%, I devised a strategy for my own personal investment. Is that the US market, I decided to just trade them. Yeah, trading means that the market is getting very volatile, which is good and quite fun to trade because we need volatility to get in and out of the market. For Asian market, since the inflation hit a half 9%, then in 2022, my plan was to accumulate them. Now, what's the difference between accumulating and buying them? Accumulating means that when I buy into Asian market, when I accumulate them, means that I think they're around the low, but I'm not exactly sure whether they are moving up or not. Yeah, so that was my plan for Asian market in 2022. But commodity is quite straightforward. I just want to buy them, find the right time, right day, and make a decision to invest into them. So now let's look at June 2022. That was my plan. US market, you could see why I trade them because is compared to the rest, it is really volatile. So later on, we're going to study into a weekly chart. Now for commodities, my plan was to buy them. Now you could see that for gold, I'm referring to gold, is that that was June 2022 when inflation hit a half 9%. You could see that the gold is quite on the upward trend, quite smooth and nice, except for this year 2023, it took a breather. But since inflation hit a high of 9% in June 2022, you could see that the gold generally is quite straightforward, it's moving up. And I believe that the rest of the commodities will subsequently pick up based on their time and season. Now, for Asia market, I mentioned is to accumulate them. Accumulate them means that I have no idea whether to buy or not, but I believe that the low is met. So it's a matter of time, at the right season, the right time, it may go up. So you could see that was June 2022. So accumulating some of the blue chip counter in STI. So, and beginning of this year, we finally see the first wave, second wave, and now we could be moving to the third wave. So for China, as I say, June 2022, been accumulating some Chinese stocks using fund. Yeah, so I buy some fund, it's easier that way. And in September 2024 this year, or 24th of September 2024. So I could see that this could be the first wave. Could we be in the second wave and moving to the third? So that's my key topic here today, which I will also want to discuss about China as well. So you can see that my plan in 2022 is trade the US market, buy into commodities, and accumulate into the Asian market. That was 2022. But there are some changes here in 2024 moving on to 2025. Now let's look at this inflation sentiment indicator, which earlier I mentioned that we could see that CPI picked a high of 9% inflation. You could see that how the trough had formed for the gold, and from then the gold has been moving up. So is the Bitcoin. So this two market became an inflation indicator by looking at this is not drawn by me, but these are by market participant. So if you ask me, is the inflation fear over yet? But by looking at how the institution and retail buy into gold, I don't think so, because the gold is still around the high and the Bitcoin is still around the high. So the price itself is speaking to me that maybe inflation fear is not over yet. Yeah. Let's move on. And let's recap about on the last session that we have with IG. That was on the 29th of May, 2024. I believe many of you have attended in NTUC conference hall. So that's what we've discussed. And towards the end, I will always give some market forecasts based on technical and fundamental analysis. So that was what we have discussed during May 2024. But this study was done even earlier in April 2024. But in any case, it's just 1 month ahead or 1 month later. So I thought at the point in time still relevant to discuss about it. So what you could see here is that that was, remember, in May, before the China roll out their stimulus package. So what I could see that some of the Chinese stock is really leading that with fear of accumulation. And that could be the first wave, second wave. And that night we are here. So we're discussing about could the discounter Xiaomi develop into the third wave. So then my fundamental understanding is that Xiaomi also developed into some EV. They are moving into EV. When I look at Apple, they have attempted to move into EV, but after that they scrapped the idea. But Xiaomi persisted on and they rolled their EV. So I kind of excited. I think there's some fundamental, but technically it is speaking to me as well. It seems to be first wave, second wave, those that into elite wave, you know what is this all about. So we just have to take a risk. At the point in time, I did want to invest in some Xiaomi, and the recent high was almost $30 that it reached. Okay, let's move on to Xiaomi today. And Xiaomi is almost reaching $30 as we could see, and today is about 27, 28. This is in Hong Kong US dollars, yeah. So this was what we have discussed. And let's move on to the market outlook for 2025. So I'm going to explain to you what's my outlook for gold. It's not just in 2025, but for the generation to come in the US market and the China and Asia market. Now let's look at the China A50. That's where the top 50 stocks that is traded in the Shanghai Exchange here. Then we could see that based on certain structure, so how I trade, how I invest is that when I invest, I look at technical analysis, but I also have to confirm with fundamental development as well. And you can repeat this process again and again in different markets and different time frame. But of course, if you're looking into short-term trading, maybe fundamental do not come into play. If you're looking to intraday trading, what I shared tonight is still can be applied to intraday trading, but maybe fundamental not so applicable. Now, what I'm seeing here structurally is that the China market has been, this was June 2022, has been on range bound. Yeah, so when the market range, it means that it could mean that the low has formed. It could mean that low has been formed. So it comes with this stimulus package. So we know the story, which is not that far ago. It's just about 2 months back. So China, for the first time, never before that they rolled up a series of stimulus, and they say that they're not going to stop. Now, so I was saying that this is an impulse wave from a range. Now, structurally, it could be the first wave, which I'm very interested right now, because for Asia market, I've been waiting for China. So we saw that since June 2022, I was advocating to accumulate into Asia. It means that I do not know whether it will go up or not, but I do not see that the low is going to keep on breaking on the downtrend. So that's why I accumulate into Asia. So along the timeline since June 2022, we saw that how India has performed and how Japan has performed. But the last one I'm waiting for, in fact, is China. And to me, structurally, it seems that China is in the making. So whether is this a wave two, we're going to examine a little bit further later into China debt that you're facing today. Is it something that we have to consider? Yes, we have to consider, but we have to understand about what is their debt all about. So I'm expecting that perhaps could we be wave three. So personally, I get into some China fund. So I have to take some risk. I may be wrong, because if the second wave don't come, it break below this, it means that whatever I've invested in, it could be wrong. Okay. Now, but in investment, it's all about taking some calculated risk. Now, so since China has started performing into the first wave, and now perhaps it seems to be a second wave, my strategy for 2025, in fact, this year, since September 2024, 24th September 2024, my strategy have evolved. Okay. Now you notice that my US maintain that I just want to trade them, means that get in and get out really quick. And Asian market I've kind of promoted from accumulating them to buying them. Yeah, it means that I think the low has formed, and I think is on the way up for Asian market. And it makes sense that I believe that there's some flight to quality from the West to the Asia market, especially the ASEAN and China market. And commodities, from buying them in 2022, now I have also promoted my commodity to holding them. But not forgetting there's other commodities that I'm quite keen to buy them, especially for crude oil. I'm just waiting for the best good season to get into the market. So this is what my plan for the next year and in a generation to come. US to trade them, Asia to buy them, and commodities to hold them. Now let's explore further. Let's look at the goal. Why I've want to hold them. Okay, now this is what we have discussed just ago. And now, so some of you, in fact, I got the interview this week by Straits Times. So she asked me this question on the gold market. It seems like the central banks around the world has been slowed in their gold purchases. So is that a concern? Yeah, I think it's a concern, but let's look at this graph to understand what's happening, why the central bank has slowed in their investment for gold. Now, first of all, we have to understand that central banks around the world have never really buying gold. It's never their part of their portfolio for decades. Yeah, so they have some, but it's never their interest in buying gold. So we could see that these are central banks holdings around the world, their holdings from 2010 to 2021. That we could see that this is their purchase of gold by this World Gold Council. But we only noticed that most of us only noticed that central banks started to purchase gold at the beginning of 2023. That's where we got the data, where we begin to realize that in 2022, the whole year, that the central bank has been buying a lot of gold compared to the rest of the year. Okay, now, and 2023 don't seem to have stopped. Yeah, so they continue to make a purchase. But I would say that at the end of 2024, my projection of the central bank purchasing gold will remain high compared to the rest of the year, 2021 and before. Now let's look at the quarterly chart. So we recognize that the 2022 was the year that the central bank started purchasing gold around the world, including Singapore. So I think 2023, Singapore is the top 3 purchasers in gold. Number 1 is China, number 2 is Norway, number 3 is Singapore. Yeah, so we are big purchasers of gold. So it's almost unheard of that MAS are buying into gold. Now let's look at the last quarter, which is from July and September. Then we could see that the first and second quarter, in fact, in 2024, the central bank purchase on gold exceeded in 2022, the first 2 quarters, and 2023. So in the third quarter, in 2022 and 3, it was quite high, but the third quarter of 2024, it was relatively low. But I would want you to compare the average compared to the rest of the year on 2021 and before. And I would say that my projection is at end of 2024. Yes, the central bank may be slowed down in buying, but that doesn't mean that they lost appetite in purchasing gold. So they're still having that position. So this is what I'm trying to say. So now I have to understand this is that when the central bank start buying gold in a major way, we have to really pay attention to what they're actually doing. Okay, so you have to think about it. And I think that, so all of us know that gold is an inflation hedge. So this is something that we have to really look into it. Why is central bank purchasing gold? Now, look back to recap on our sharing on the 29th of May this year. That was just about how many months ago? About half a year back. That gold was already at 2003. So my forecast for gold for this year, to end of this year, is that gold will continue to move up structurally, where you know that I like to look at patterns. What I'm seeing here is that the gold has formed this cup and handle at the end of 2023, which was last year. I saw for the first time in history, which I explained at the NTUC conference hall with many of you, that I believe that end of 2023, the last day, it had finally closed above $2,000 convincingly. So my forecast for the gold in the whole year of 2024 is moving up. So where is gold today? So gold today is at 2006. At one point, it's almost reached 2008, which I believe that will continue to move up. So you may want to screen capture this 3-month chart, which is quarterly chart, that you can see a span of from the 70s all the way to current. So how I look into my goal and for investment positioning is that I base on this trend line. Of course, not just trend line, but also understand the fundamental as well. But you could see that how I chart along the timeline. But of course, in 1972, I was just born. But there's a beautiful thing about chart that we can look back into the past history. So based on this trend line, I just mirror it. Take a see how beautiful it was reacted to it. It was resisted. So once resistance it broke, it became the support. So use the same trend line, you mirror up. So this became a very classic trend line, or a trend line that you can use throughout history, because it is there's a relationship between the trend line and the goal. This trend line I'm talking about. So I continue to mirror it. You can see that how the market have resisted between 2021 to 2023. Finally, at the end of 2023, broke. So this resistance now moving forward, this about 2001, depending on the timeline you're looking at, this will become the support. Yeah. So as if there's an opportunity in the market dip to about 2001, so I gotta ask myself whether I'm going to continue to hold my goal. The two questions I'm going to ask is that, is most countries still in debt? If the answer is yes, I'll continue to hold my goal. Is most of the countries still have the appetite to continue their QE program? If the answer is yes, I will continue to hold my goal position. The US market right now. So on our last IG sharing on the same day itself, May 2024, so this is what I share, that then the market was trading at about 18,000 plus 19,000. So I say that the US has a very unique instrument. I think they can continue to issue bonds, and they have a choice to do QE if they want to. So as long as there's the ability to issue bonds and there are investors buying it, and the ability to issue QE, I think the market will continue to go up. So, which is quite true that we know that the market continued to move up for US market. But I'm more concerned about investing in the US stock, because when it comes to investment is that we do not just focus on the upside, but we also have to take care of any potential downside risk as well. So I think for the US market, I'm a bit concerned that there's potential downside risk. So therefore, since May 2024 this year, I'm not exactly keen to buy and hold for a very long term. I just want to trade. Trade means that I'll be very alert that once the market starts to turn, I have to react very quickly. Now let's look at the weekly chart for the US market. That we could see that the market since June 2022, when the inflation hit a half 9%, the market is actually very volatile. That we could see here, right? But I'm going to narrow down to the day chart. Now, day chart, you can see that how volatile it gets. Yeah. So in 2024, so this year, now if you're gonna make your purchase at about maybe 18,000 at the beginning of the year, so at the half year mark, you're still gonna see 18,000, but in between you see that there's a lot of huge volatility. Yeah. So it also means that I'm not wrong to say that the U.S. market is packed with trading opportunities since June 2022, when the inflation hit a half 9%. You could see that not just on the weekly chart, but also on the daily chart as well. Very volatile. Then if you want to look for hammer, you want to look for inverted hammer, there's plenty of all of these for us to take opportunity in. So that's for the US market, and 2025, I'm going to continue to trade the US market on both sides, yeah, to buy on dips and to sell into strength as well. Now let's look at the China market, which is I have a deep interest in the China market, because for the Asia market, I think most of us know that in 2022, I was accumulating the Asian market, but come 2023, 24th September, I have a shift from a cumulative Asia market to taking a risk to buy into Asia market. The timing is because of China. Okay, let's look at China right now. Now, why I've promote myself from accumulating the Asia stocks to buying the Asia stocks. Now, it's because of the China shift in policy. Now, let's look at China, because I think the number one concern about the Chinese market is their debt. Okay, now, and I think it's very difficult to read about what's happening to their debt. So I try to be as neutral as I can. So what I do is that I try to read the news from the West about what's happening to the China debt, because it's a lot of money. And what's happening to, I also try to read the news on the Chinese side on how to explain about their debt. So I just have to form a conclusion. This may not be accurate, so please email to me if you find that what I'm going to present to you may not be accurate. But what I'm trying to do here is that I try to understand about this Chinese debt. What is it all about? Now, so many of us know that for China, after Deng Xiaoping visited Singapore, that was in the 70s, he was very impressed. So he go back, he came up with a plan that, of course, China back then was very poor, but I think he wanted to mirror what Singapore is doing. So in 1978, he opened up China. Yeah, so it's still a communist country, but in their capital market, he wanted to open up. Yeah, so during that 20 years, there's a lot of local businessmen, they prosper, so they have a lot of money. Now, the next stage about China growth is that they need to build roads, build houses, build infrastructure. So I believe that period of in the 90s to today, for the last 30 years, they have come up with this IIC, which is the Infrastructure Investment Cycle. Now, how it works is that the different local governments, that means the central government and local governments are different. It's something like in Malaysia. In Malaysia, they have different states. These are their like local government, but they call it the district or division, depending on East or West Malaysia. They have the central government in KL. So I believe most of the fund will go to the central government. So in China is that in the development of their IIC, they allow their central government to issue bonds where most of them are the taukeis, banks itself, to buy the bonds, means that the local government get all this borrowed money and they build all this infrastructure. So for the last, I believe, 30 years, they have built a lot of tall buildings, highway, speed rail. I think I see that on the television, right? So end of this year, I'm going to visit China. From Beijing, I'm going to take a train down to Shanghai to take a look, to experience that for myself. Now, so what happened here is that over the past about 2.5 to 3 decades, they've been doing that to issue debts to build infrastructure. So, but now the Chinese themselves, they also know that their city are quite well built. Not much to build. Of course, there's still a lot to build. So when the central government tried to issue debts, more bonds, the take-up rate was very, very low, you know. So there's not much to move on anymore. And again, I say that all these bonds that they issue by the local government, including roads, railways, airports, and urban utilities. Now, so what happened here is that the this news that announced on the 8th of November is that it's not just one local government, there's all these provinces, which is also called the local governments. They have a lot of debts. But these central government have money. So how much money, of course, all of us do not know. Yeah. So these are based on my personal interpretation. So please go and read up. So any inaccuracy, please email me so I can improve myself on that. Now, so the central government, they want to do a debt swap. Yeah, I do not think it was set at 1.4 trillion, but this time around they issue about 1.4 trillion US dollars. It's not renminbi, by the way. 1.4 trillion dollars to do a debt swap with all these local governments. So I would say that if they continue to do that, well, personally, yeah, local debt in China is an issue, which I'm concerned. But once I have a better understanding about, oh, now the central government are coming in to do a debt swap with their local governments. So as an investor, I have to look at it this way, is that the debt of the local governments in China seems to be on resolution. So that brought me a little bit more confident to add in more purchases on my China fund. So, but along the timeline, I'm going to see what other goodies are they releasing. Okay, so I also have to, along the timeline, I have to make sense about the Chinese government. Are they still having a lot of reserve? So this one, nobody knows how much they have. Just like nobody knows how much Singapore government have. And it's good practice that nobody knows, because in a warfare is not just on hot war, but this is also financial warfare. So it's good that nobody knows how much they have or we have. Yeah, because financial warfare, it is real. Now, so what they're trying to do here is that if I'm going to say that the debt there's some resolution on the Chinese debt, which is good. From my understanding is that the central government is going to continue to issue more bonds, and they're not interested in QE. Okay? QE basically is the central bank print money to buy into their own bonds, the government bonds. So the Chinese are not interested to do that because I think they study from the Japanese economy, they study from the US economy, they find that it's not going to work. But they're going to continue to issue bonds. And by the way, all these bonds the local government has issued, most of them are internal bonds. Internal market means that the banks are buying it, the institution or maybe the pension fund is buying it, their own individual tauges are buying it. So I'm not too sure about these bonds that the Chinese central banks are issuing, who are buying it, but I think it's still quite domesticated. But what I'm seeing here is that, let's say I put the debt one side, it seems that there's some conclusion here. But I'm also interested to know what's the next phase of China development. So in the past, their GDP are mostly based on infrastructure, property, all this and that. But what I could see literally I'm seeing now is that they are moving into from a low-end manufacturing. That's how all the tauge over there got rich and able to buy into the bonds, into a high-tech economy, where we could see that EV, they're the market, solar panel, they're the market, batteries, they're the market. And now, even the green energy, high-tech sector, they're in the market as well. So I think there's some hope. If that debt are being taken care of, if this transition from a low-end manufacturing to a high-tech economy is successful, and I believe that at this point in time, from an investor perspective, it is at a low point for me to accumulate, which I've done it. But now after 24th September 2024, they make their announcement, they're going to support the stock market. And I think that I'm going to move into from an accumulating mode to a purchasing mode right now. So I'm quite satisfied with my units that I have. I'm just going to continue to wait and keep my finger crossed. I hope that I'm right on the second wave is a retracement, and I do hope that the third wave may come. So I hope that the next sharing with IG I can give you a good report on a recap of what we have done on the discussion here tonight. Now let's look at the bonds of the US, UK, and China bonds. Now we could see that the US bonds in the 80s to today, in fact, to me, the US bonds, there's a meltdown right now. But I'm not sure why not many people are discussing about it. And for this UK and this US bonds, which is right, yeah, T bonds is US, long gilts is UK bonds. And look at the China bond are relatively still healthy on uptrend. But of course, you're going to compare in 2016 to today, and let's say it's 2016 is about here, you could see the US bond is much lower. 2016 for the UK is about here, and UK bond today is much lower. So 2016 and today, I think the China bonds are still quite well in subscribed. Yeah. So when bonds are in well subscribed, it means that there's a general uptrend. That's what we're seeing here. Okay. So the bonds means that when the China issue bonds, will there be investor buying? I think that's important. From this chart, my guess is that it's still looking healthy. But for the UK, US, I'm not exactly sure why they so low, but it still speaks to me that the investor are not exactly keen to buy into the US bonds or the UK bonds. okay, let's look at the market again. So after discussing about the China debt, because this debt is always a concern, I hope that you have some insight about the US debt or rather China debt. What is it all about? I'm still learning. So honestly, there's not a lot about writing about exactly what is this China debt all about. Hopefully the next sharing I'm able to give you more insight about China debt. So just to summarize, that the China debt acquired by or birthed off by the local governments in China. So now the central governments are doing a debt swap. My own term, a debt swap. I do not know what's the technical term they use. Debt swap to I wouldn't say use the word rescue, but they're doing a debt swap facilities on their local government. So in terms of whether the local government in China is going to have a illiquid issue, I don't think so. Yeah, because the central government now see the problems. They're getting into the veins of the Chinese economy. So, but the next thing is that if the debt is kind of have a resolution, and I hope that what I'm seeing accurate, where I think there's a successful transition from the low-end manufacturing that we all know about China, that I hope that their high-end manufacturing will be successful. Then my investment will pay off. I hope not just one fall, but multiple bankers in the near future. Now let's look at the next slides here. Now, so what we're seeing here is the China A50, and today we're here. I'm not too sure you're going to the third wave, but this is elite wave. And we also see that Lion OCBC Security HS tech means that those Chinese stocks listed in Hong Kong, the tech stocks, we're also seeing the similar behavior as well. From a range, it moved up to its first wave. And are we in the second wave? I can only say that my guess is that yes, structurally, I'm seeing that based on the elite wave theory, is impulse on the first wave, break away from the range market and from the extreme low. So it fit into the rules of elite wave. And second wave, I'm seeing it now. I hope that third wave will come in the next few months or the next few years. And when I'm wrong, because the elite wave say that this wave 2 should not be 100% of the starting of first wave. So I will only know that I'm wrong if this wave 2 continue to sell down and break the 2024 low. So I would say that my risk is quite small, but of course, once it break the low, I have no idea where it's downside. So it's always good that when we make a purchase, always have a calculated risk. So if I'm wrong, the market will not kill me. I'll still be alive. I'm still happy. I'll still go for my annual vacation. I'll still live a life. So not to worry. But I think I always enjoy taking some calculated risk where I will encourage you to do the same as well. Now, so just one example on this wave 1, wave 2, wave 3 from a period of accumulation. So this is what I usually do every week, that we have a case study every week. Once you understand about the accumulation, move into wave 1. So in 20th September 2022, I saw Yeap Jun Rong, another China company listed in Singapore, that it was stagnated. It was at $1, but we could see that the whole market is a range bound between about 40 cents to about $1, where we could see here. So, but today we could see that that was at the point in time is wave 1, where I think between me and the members we discussed about what stage they're in. So I'm actually hoping to point them out that it's broke away from this range, is at a value stage. So value stage means there's value to buy, and that was at 102. It was here, 102 about here. So after that, this first wave, second wave, and now Yeap Jun Rong is in the third wave. So this is I just captured about a few days back. So I think it's still on the way up for Yeap Jun Rong. But usually I would not participate at the end of the on the ongoing growth. I will try my best to identify where is the first wave and second wave. You try your best to do it. I think structurally it's not too difficult, but if you can see that there's this relationship on accumulation for a long period of time, then form a first wave, potential second wave, and of course potentially third wave to come, you must also fit it into the narrative or what the company or what the industry, or in this case, what we've discussed about is about China, about Asia. What is China and Asia doing? So I suspect that the West is a bit messy. So I suspect that investors are doing a lot of flight to quality from the West to Asia in a time of trouble. That's what I'm seeing here. And on the 2 weeks ago, when I heard about the podcast on FT, the Financial Times, so one of the follower of the Warren Buffett, he said that he has been selling off when the market is going up. He have offloaded about 166 billion US dollars worth of stocks. So that's something that we also have to look at it. So what is Warren Buffett doing as well? Yeah, so I suspect there's some flight to quality in times of trouble ahead. So I think I'm not too sure whether they have time of Q&A, but maybe what remotely with me is Danny. Met with him once, and I hope that we can meet up in person again, physical. Maybe with this time we can take some questions if you have. I'm not too sure is there a place that we can submit the question. What I'm going to do here is that if I can answer you with the chart itself, I would love to do so. But before that, when you submit the questions, and Benny can continue to evaluate your questions and we have exchange together. This is how we can stay connected. So earlier I mentioned that, that I have this YouTube channel. It's called my name, Kon Hao Join Together. So every Sunday at 10 a.m. I'll launch insight about what's happening to the market. So you can subscribe to it so you will not miss what I'm going to share this coming Sunday. So then I have this resources, Weipeidia.com. You can go to resources. There's some resources you can download from or can enjoy. Just if you have time, just go ahead to view some videos or whatever if you have time. So last of all, that's my email address, konhao@weipeidia.com. You can feel free to email me what we have discussed tonight. I would love to exchange ideas with you. So I think this time I'll turn this to Benny, if there's any questions that our viewer may have.
Hi, Kon Hao. Hi, everyone. This is Yiming from IG. So some questions coming in. One of them being, how will Trump tariffs affect China markets and Asian markets as well? And also, is Hang Seng Index also a buy then?
Okay, for Trump, I think I can answer on your behalf. When we answer on your behalf, it means that my answer is as good as yours. So, right. So, then I think let's look at the U.S. market here. So, as I apply the trend line, I also want to apply trend line to the stock market as well. So, his inauguration will be in January this year, and is it Jan or Feb? But doesn't matter, is it Jan or Feb, right? But he's going to be elected president, means that he's going to be president in a month or two. So that it's a very outright about he's going to increase tariff. So I watched one of his clip. I try to understand why he want to increase tariff. Of course, want to make money. But I think his whole intent is from that clip interview. I try to gain some understanding about why is he going to increase tariffs, because when he increased tariff, he also knows that you will bring up inflation to the people of the United States, because if you want to do e-commerce in any country in the world, you should target US consumer, because they are the #1 consumer in the world. It means that they buy the most things with everybody else. Yeah. So now, because he knows that if he increase tariff, that will hurt the inflation and the people of the United States will complain. But why exactly he's doing that? Because it's, what he wants is that he wants that the people selling into US is so expensive because they have to pay so much tax. So what he hoped for is that these people or these countries, other countries, merchants selling into US, he hopes that they will go to US to set up company. Yeah, because it doesn't make sense to import in the US to sell the US consumer. So he hopes that the other manufacturer will go to US to set up company so that can avoid tariff. So which may be a good strategy, but in a short run, on the long run, whether it will work or not, I'm not exactly sure, but we have to wait to see. But in the short term or mid-term, definitely I think inflation may creep up again. Say, for example, he roll out the different tariff to Canada, to Mexico. Haven't talked about China yet, so I don't know how many percent is going to impose on China. So when inflation starts to move up again, we also know that the interest rate may stay or stop its ease or even maybe hike. Now, then we got to look at the NASDAQ right now. So same thing, that I've drawn this uptrend line based on the trough. You can see how beautiful this trough is. Yeah. So maybe what I should do is that I should not K long, right? So what I should do is that you can do the same here, is that I think I should do the magnet style. Use this low. Just a minute. So that will give us some time to also explore the market together. I use the magnet. I plot one low here, and I try to connect one. Yeah, so extend it. How I get it is based on really literally the low to low, and I try to mirror it. Yeah, so let's say erase this. Clone this. And I think I like to let it rest on the here. Yeah, you can see that it's pretty close to. Now, when you rest, you can rest on the open, high, low, close, either one. So you just gonna play with it. So maybe you can rest on the opening price, closing price on this significant peak. Yeah. So you have to experiment it yourself. And so if I do that, I'm seeing that the market is actually reacting to quite nicely on this parallel uptrend line. Talking about the last 25 years, right? So this is something amazing about technical analysis. That yes, the month of what month is this? The month of November this year, this month, of course, right? You can see that could it be a potential uptrend that's meeting? I think possible. Yeah, so we have to entertain the thoughts possible with Trump tariff, because you're asking me about Trump tariff. How does it going to impact the market? With Trump tariff, inflation may pick up. Inflation pick up, interest rate may stay or height, which is no good for the stock market. So it may have some resistance. And let's look at the daily chart. So this was the trend line that we drew earlier. So it's hovering in and out. And I draw another trend line here is that just now I mentioned very specifically is that we try to apply the same principle on different time frames. So I want to do the same. So of course on the monthly chart we can see that the trend line. Okay. Based on this low, I project up. It meets quite nicely or very nicely. So now, then I see another relationship here is that, can you see this low and this low? I say that how to, just like brief about how to construct an uptrend line is that you try to find 3 significant trough. So I got 1, I got 2, I join them together. You can see there's a few aligned very, very nicely. So what am I going to do here is that since we know that monthly chart, there's some resistance, yeah, around here. You may continue to buy into dips as it suggests, but I would say that on the monthly perspective, there's also risk that it may break and go down. Yeah, it may. So do nothing. But what if you could see here is that if you start to form this and suddenly, you got to be suddenly, give you a very impulse break. Okay, let's say a very impulse black bar. You know that it's reacting very well to this uptrend. It broke below. Or suddenly move up, then you may, if I'm a hammer, you may want to join the buy on dips. Yeah, so that's why I say for US market, I like to trade. There's a lot of opportunity as we discussed. There's this breaking point here. I believe that likely about 60% chance it will move up, continue to move up, but it's up to you. You can buy on dips. Then you got to place a stop loss if you are trading. But I think the interesting opportunity is that I'm going to continue to eyeball this uptrend. The moment there's one single day it break quite nicely and impulsively on break this uptrend line, I think the next moment what I need to do, I think I know what to do, would be I think I like to take a risk to sell in the strength with a stop loss, say, to the nearest high. So I think I just also explained to you how to trade the market based on your question. Sorry, I give you more than your question because the question is about Trump. Of course, when US markets start to go down, the other Asia market will also follow, but I think this time around will be a bit more cushion because my understanding here is that because you also asked me about Hong Kong market as well, right? But I think the Asian market, as US market move down, Asian market will be much more cushioned this time around. It may move down some more, but I will take this as a buying opportunity for those stocks that I miss out buying before 24th of September 2024. Yeah, so if you have time for another question.
Okay, so just one last question due to time constraints. Last one is, how much time should we keep between buying and selling?
Okay, very good question. Now, let me clear my throat. It really depends on the who you are. Let's say, for example, how much time should we hold a position? But let me just break down into 4 quadrants between investing and trading. Here is that the first one is called long-term investing. Long-term investing means that the holding period is perpetual. Like right now, I hold in gold, I want to hold into Asia market, hold in China. It's perpetual. I have no time frame when to exit. The other time frame is called the short-term investment. So this I personally coin it that the short-term investment is an investment that I hold for more than 3 months to maybe about 2-3 years. More than 3 months to about 2-3 years. Now, then the other quadrant is short-term trading, where I will hold it between 2 days to 3 months, because this is most of the option contract, futures contract will expire within 3 months. So it makes sense to classify it then as short-term trading, holding period between 2 days to 3 months. And the last quadrant is day trading. Day trading means that you do intraday trading. Now, your question is that how long should you hold a position? Then let me give you this answer here is that then it really depends on you, who you are, how are you planning for this trade? Are you a short-term trader, which you hold from 2 days, you intend to hold for 2 days to 3 months, or are you a day trader that you intend to hold for within the day? You're not interested beyond next day because you're concerned about gap? Or are you a short-term investor where you hold for at least 3 months, if not 2 to 3 years? Or are you a long-term investor, you have indefinite time frame that you want to hold this perpetually? Just like what I have for my Asian market, China funds, and also the gold commodity market. Now, in this context here for the NASDAQ on the daily chart, I would say that likely this is a short-term trading. Now, let's say, for example, in the context of it move up, okay? It continue to move up from here, this uptrend line that we're seeing. Maybe what I should do is to project upwards. Okay, see, for example, next moment, it move up, it come down, and it form a point of reference, which is, I'm trying to draw this. Let me just clear this. I'm trying to remove the extension. Okay, try to draw a hammer. Okay, now as it move up, daily chart, right? It moved down there, form this hammer. Can you see a hammer? Yes, I do my best to do a hammer. Now let's say it's reactive to this trend line. The next moment, what I do is that I want to buy here. Let me look for the arrow. Okay, I will want to buy here the next moment. Okay, with a stop loss here. Then, for example, I want to take a swing, and you can see a typical swing for the NASDAQ is how many days? About 2 weeks, right? A typical swing. Something like this, about 2 weeks. Can you see there's a pattern here for NASDAQ for this season is about this. So then you also have to have this 2 weeks, right? So earlier I said that for short-term trading is between 2 days to 3 months. So if I buy here, it sit very nicely on this uptrend line. It form a hammer. Then I know exactly next period to buy here, to put a stop loss here. And I want to follow the dynamics of this NASDAQ here. Means about 2 weeks. And even the 2 weeks itself, the swing can be quite typical, which is how many points here? It's about 18,000. You could see here it's about 18,400 to about 20,000. Yeah, so it's about 1,000 plus points. It is possible. Yeah, so on the daily chart, between 2 days to 3 months, but in this case, about 2 weeks, 2.5 weeks. If I'm going to buy here, put a stop loss here, my objective may be hold for about 2.5 weeks. But along the timeline, do not be so rigid. You got to make changes when things start to change. So I think this is my reply to this question again is that how long should we hold position? My reply is that it really depends on how you plan your trade. Are you going to be a long-term investor? Are you going to be a short-term trader or short-term investor? Let me get this right again. Long-term investor, short-term trader, long-term investor, short-term investor, short-term trader, or day trader. Yeah, so you got to start from who you are, how you're going to plan, then you look at different timeline. In this case, it's a short-term trader, holding period between 2 days to 3 months. So I think with that, sorry I exceeded the time, but I just want to end up close it with a good understanding of what we have discussed. Yeah, I'm going to pass this time back to you.
Okay, thank you, Kon Hao. It was a very insightful session for us, and always a pleasure to have you hosting and sharing your insights for the clients at IG. And then yeah, for everyone who's attending this event, yeah, hope this session gives you a very brief but insightful outlook for 2025, and obviously do your due diligence. These are more educational purposes and what we think may move into 2025. And yeah, it's really more like an educational piece, and you have to do your due diligence before making any investment or trades.